Hello and welcome out to another Insights. We're going to get started tonight with the quick market update since it is Wednesday and I am behind a day. I realize that and just trying to get used to this new schedule, so this new the changes. So bear with me if you would, ask for a little patience. But I saw this. I know I've used this before, but I think it just hit me just right today. And it is Darwin, of course, but it's not the strongest of the species that survive, nor the most intelligent that survives. It's the one most adaptable to change. And I think that's appropriate because of what we're seeing in the market. What we'll look at here in just a minute with the chart is, if you saw the S&P today, was up about 2025 at one point, and then turned over. And going in the last hour, we sold off and basically closed essentially even from yesterday. So it looked really bullish this morning, or somewhat bullish, I should say. But it really was never there was never a whole lot of strength there, and the weakness showed up in the afternoon. So reality is that it appears that the market is changing, and it has been for a while. We've been talking about it for a good year, almost a year and a half now, since October of 14. Looking at the possibility of a change in direction. And it's not uncommon. It usually takes anywhere from 9 to 12 or 15 months for something like this to happen, for a top to form. You go back and look at the 2000 crash and the 2007, 2008. It took, I think one was 12 or 13 months and one was 9 or 10 months. We've been talking about it for a year. So, but it looks like things are changing, and we need to be in a bearish mode, because it looks like that's where the market's headed. So that's where I thought this quote was appropriate, is when we can adapt to change and get out of that bullish mindset and get into and see the market for what it is, and see that it looks like it is probably going to be headed down for who knows how long. But we'll see. News is starting to finally come out of the economic data getting weak, and it's been coming out for a while. It's just nobody's wanted to admit it in the media. Excuse me. So it's been pretty evident in the charts for a while, as we all know. So let's look at what's coming up between now and next week. Economic data. A lot of this, there's just too much of it now to even try to weed through it all. It used to be pretty simple. There was only 10, 15, 20 different data points. Now there's all kinds of stuff. The EIA, I don't even know what that is. Energy something agency, I don't know. Who knows? There's all this distillate and gasoline. I guess if you're trading those specific markets, then it's important. But it used to be just crude, and which I guess with the ability to keep track of the data, and over the last several years with technology, it's not a bad thing, I guess. But it does make it harder. There's a lot more to weed through for us. There's core retail sales month over month coming out on the 12th, which is Friday. Obviously could have an effect on the retail sector, which has been beat up pretty big lately. I don't know, Macy's and Walmart have been on the radar, and so definitely something to be concerned with if you're in a trade on that sector. Retail sales, same thing. FOMC member Kaplan, I'm not even sure who that is, but he's an FOMC member. What to do? It's like, who cares? Building permits, may have an effect on the housing sector. Core PPI, housing starts PPI, all coming out. I think that's next Wednesday, isn't it? Yeah, next Wednesday. So nothing major, nothing significant with respect to economic data, which is good and bad. Realistically, probably going to just keep the trend going the way it's going, which is down right now. So speaking of that, let's take a look at it. We get to the S&P, and you can see there with the candle that we had today, it's exactly what happened. We had a small gap up this morning, and it rallied up. We were up 20-25 in the first hour or two, but then in the last hour, it just trailed off. And part of the reason, I kept looking at it intraday, watching it, and just not a lot of volume, not a lot of push to the upside. So, but you also look at the end of day volume, and we were down a decent amount compared to the average. Of course, the average you can see has risen over the last 2 or 3 weeks, up to quite a bit higher than it was. Of course, January it's a little slow, but 2.3, so it's gone up by a million. That's, well, let's see. I mean, that's Christmas time, so it's dropped off a little bit. November, December is usually slow, so it's maybe a little abnormal. But 2.35 million, and with the big drop we've had and the increase in volume we got there in the first part of January, we're now up with an average of 3.25, 3.3 million. So over a million. So a good 20% increase in volume in the last month, month and a half, and on a bearish move. But the light volume today is definitely a little bit concerning. Even though the price action is bearish, the volume is to a certain degree, I don't know if I'd say bullish, but it's definitely not bearish. So we will see what happens. You can see here with the long-term chart, you can see where we're at. I mean, we're hitting a new low. The last time it was at this level, that closed this level was, well, October 14, but it was actually before that, because the low of there, what was the low of closing low? 1862. Yeah, 1862, and we're 12, 11 points below that, so 10 points. So, which isn't much. 10 points on an 1,800 point index is not a big deal. So there's still that possibility that we bounce here, but if we don't, if we crack this, there's not a whole lot. When we go here you look at the weekly chart, there's only a few little stopping points right here. There's really no major support until we get to 1550. So I think it's going to be interesting. The next few weeks could be extraordinarily interesting because especially if it cracks tomorrow or the next day and it continues down, especially if it has a big down day, it'd be easy to call it the beginning of a crash, I think, at that point. So we will see. We will see what happens, but the beauty is that we are prepared and ready for it if that's what happens. So you see NASDAQ up 15, which is nothing for it anymore, 5,000 point index. Industrials actually down. This is quite a bit different. Down almost 100 points. I mean, you can see the candle there. Still light volume, but it dropped off pretty heavy, where the other markets were all pretty flat. So transport's down 12, relatively flat. Russell flat, and the SPX was obviously very flat too. And then the VIX, of course, was up, or actually it was flat as well. But considering how far it was down in the morning, it rallied back up and got a pretty decent little boost there. So interesting to see the range that we're staying up here with the VIX. It's staying up in this higher, the 20 to 28 point range. So I will not be surprised if it takes off. So it's getting interesting. So we will see what happens. Whoops. We will see what happens in the next few weeks. So there we have it for the market update, and I will get you the little guys tomorrow, and then we'll take it from there and see if we can get on track next week. Y'all have a great night. Bye-bye.